Hey there, well, the major's still in a holding pattern here. Let's check out the Wi-Fi Interactive. Specifically, I'm looking at a 2-month chart of the S&P 500, and we are in, I believe, day 9 of this incredible consolidation pattern where we're just going sideways. And I said CPI is going to be a big report. Unfortunately, I said it was going to be this morning. It's tomorrow morning, but until then, I think we're just kind of waiting for that big inflation catalyst. And as I posited yesterday, I think if it comes in as expected or a little bit better, market should rally with that. If it comes in a little bit hot and the markets do rally with that, we close in the green, that's incredibly bullish. But if it comes in hot and we sell off in a big way and we start heading and breaking down through this support line, that is a bad sign. Let's check out the sector action for today. Only consumer staples is in the lead here. To the downside, we got materials, that's off about 1%. Energy also down. So some of the big leaders here, energy, materials, the best performing sectors recently, those are giving back some gains. Checking out our leaders, here's what I'm noticing. Julie, you were checking out those Chinese stocks earlier, K-Web. That is down about 5%, but over the last 3 days, we are still looking at some gains. It was notable 2 days ago that when the markets opened up red, we did see K-Web come out with some greens. You can see still holding on to about half of those, about 5%. On a longer term basis, it does look like we have the very beginning of a potential breakout here. This stock is so depressed, this ETF is so depressed, I wouldn't be surprised to see a material bounce here. I'm not that bullish on the sector long term simply because of regulatory risk, but a lot of these beaten down markets look like they want to bounce, simply not today. Here are the Chinese stocks. Let's check out that 3-day price action. You can see a lot of these really holding on strongly to some of those gains. Alibaba is still up 15%, Pinduoduo up 12%, and here are the ARK components. Now, those are giving back some of those gains today, and this is a 3-day look, so I'll put this back on the intraday. Nevertheless, we want to see these perk up to support the bullish case on that report tomorrow, guys.
Jared, something else that you are watching as we continue to watch oil prices and oil stocks, you did a deep dive on where the Dow could be if Exxon hadn't gotten kicked out of it, and I imagine it would have helped matters.
You bet. Let's go to the Wi-Fi Interactive today. I crunched the numbers. I'd forgotten that Exxon was booted out in the middle of the pandemic. So was Raytheon Tech, so was Pfizer, and you look at the returns here. So these were removed as of August 31st, almost 2 years ago. Exxon is up 157% since then. Raytheon Tech up 59%, Pfizer 49%. That's as of yesterday close. And look what they kicked out. Look what they put in. Honeywell, which has posted gains since then, but only 15%, down 6% this year. Amgen down 3% over the last, year and a half, 2 years. Salesforce down 30%. So it just goes to show you that sometimes when you make these switch outs in the heat of pandemic, you don't know what the other side is going to look like. They didn't know that energy was going to become the huge value trade that we're seeing right now. Now, if you crunch all the numbers, here's what we have at the bottom. The Dow is currently up about 15% from that time period, from August 31st, 2020. It would have been up 20.5%. So that's a difference of 5.6 percentage points. That makes a huge difference when we're talking about compounding interest. And the Dow would be a little bit better off, or not as worse off as it would have been otherwise. It's down 9.4% now, and down 7.9% under the old regime. So these things matter. I would also point out that Apple did that 4-for-1 stock split on August 31st, and that may have been a catalyst for putting in some other changes here. So I don't want to dig on King Apple here, but interesting to think about.